Hi guys, welcome back. So I will go over with the market first and then I'll review with you the disaster again today. Yes, again. And then I'll review the stocks you asked for, okay? So it looks like Nasdaq is on the way back to making all-time high. It's getting really close every day. This run-up gave a few false alarms, but because of the shaking, it makes the run-up healthier. But we also need to keep in mind that the real dip usually happens after a few false alarms. So just keep in mind about that. But doesn't mean you don't do anything. So first of all, have your portfolio or your position, especially the short-term ones, to set up stop loss so anything happen, you will be protected. And you can always have cash to buy the dip. And also doesn't hurt to diversify. Nasdaq is less than 1% away from making all-time high. And the volume is shrinking. So keep in mind about that. Today we had a V-shaped recovery again from very quick diving into getting back up really fast. And same thing with Dow Jones. Open up, diving until 12:30 and then had a fast recover, but still close 0.6% down, at most 1.2% down. So that looked scary, right? Now look at the Dow Jones, on the other hand, have been doing nothing but falling every day. Today, it looked like it had successfully broken out the support of the 60 MA, selling with big volume too. So it opened up breaking the support already. Very bad looking chart. So who do you think bought the dip at 12 o'clock? Institutions or retail investors? And I would think it's of course the institutions. So this is what I would keep in mind in case the institutions have been buying the dip of Dow Jones, and that would mean money is rotating. So I think today might be a good chance to buy the dip of recovery stocks or traditional. For example, I talked about SAFE yesterday. Spirit Airlines, ticker symbol SAVE. So it had been resting for 4 months and today exactly tested 100 MA and got supported. I think we might have nice rebound of the recovery or some traditional industry here. Similar with our MESA, ticker symbol MESA. It had been not moving much, falling a little bit every day, but every time it did, it recovered on the same day. So we'll see if it can break the support around 9. The price movement and the chart doesn't look as good as SAFE or American Airlines. But for now, it has not broken the support either. That's why I only trimmed the position, not sold out. So if it touched the gap again, around 8, I can add more just in case. Another example is Disney, ticker symbol DIS. You see, today Dow Jones had very bad day. It dropped quite a bit, crashing during the day, but Disney closed at minus 0.01% and shows increase of buying volume. So who do you think bought the dip? And Boeing, ticker symbol BA, it has a big round top here looking scary because it has been dropping every day. But the thing is, it has a really big gap up there acting as a strong support. So if anything, it will bounce back up after touching the gap. So why do I recommend airline right now? Number one is to hedge against the growth stocks because we are very heavy in techs and I think money rotates very fast. So at least when during a correction of the tech stocks, we might still have other plays that can be different in our portfolio. And also, I think with the economy reopening, I think the institutions would find many ways to hype up recovery sector so then they can plan out their exit strategy. For most of the recovery, I think the institutions have been buying the dip for over a year already and they just need a perfect moment to exit and deliver it to retail investor. And the only way to exit usually is to pull up the share price. That is my opinion. Now, let's talk about the disaster today. Again, surprise, is the education sector. Now, I got stop loss this morning at market open. What I realized is that most people don't put stop loss or they don't like to put stop loss, and it is quite dangerous when you try to catch a falling knife without setting up stop loss. The only thing I would risk catching a falling knife is around 1 to 2% loss with a small position. Like I said in my videos about TAL before, I said it is uncertain right now, so buy in slowly, don't go in all at once. So please mind the risk here. So all the education sector dropped a lot today because there are rumors online saying TAL or go to institutions like this, they are firing a lot of employees. Rumors online and also institution investors saying right now it's better to avoid this sector first until the dust settles. So as they think this time is different. So that's why another day of fixed selling off. So Yesterday I was doing some research about this and I saw some very interesting insight. We know that right now the government really wants people to give birth to more children because they have too much pressure raising kids in China nowadays. The cost to raise one child in China had increased to 2 million yuan in China. That is crazy. 10x from 10 years ago. So no wonder the birth rate got so much reduced, right? And like I said yesterday, most of the household family just by default think the biggest part of spending should be in the kids' education. So that is the biggest reason why the government wants to regulate on education outside school. So that is the number one reason. And number two, I've also said this in my previous video, it is the government needs to have more comprehensive talents. So instead of academic education, they want these institutions to focus more on the comprehensive skill and talent. So about the cost of raising a child. If the government helps parents to save this budget on institution outside school, it would help them save a lot of household spending, right? They might come up with regulation that lower the tuition significantly. And for that, I think they can combine the official schools and the out-of-school tutoring program together. This way, the government will be making several big orders to institutions instead of the institutions facing individual customers, individual parents. In that case, it would mean the institutions would have much less profit margin because it's B2B instead of B2C. Because usually the business model of B2C has higher profit margin, much more than B2B. And I think if the government has really strong motivation, determination to reform this whole industry, they can do something quite strict. For example, they can limit the number of these tutoring institutions to be less than 3 to 5 in total. I mean, just look at LKCO. Imago has one of the 5 official licenses granted by the government to be able to scan within the country to make the HD map, right? So they can totally make it very difficult to get the qualification and reduce or cut a lot of the institutions. It could be majority of them, 80%, 90%. I think it's possible. And the fact that they want to grow more comprehensive talent, it would mean they would favor more the other kinds of institutions that teach specific skills instead of the K-12. And this is directly targeting companies like TAL that focus more specifically on the K-12 studies. That's why right now the whole sector in general had been falling like a rock, and why TAL specifically have been dropping more than the others every time, because this is directly targeting their business model. Actually for YQ and GoTo as well, but maybe because they already dropped a lot before already. So anyways, there is no doubt that the government this time is putting a lot of effort and determination into reforming the whole industry. Even the institutions might be too scared to catch the falling knives now because they are not even sure what's going to happen to the industry and these companies. But the sure thing is the valuation model of the industry would be changed. If what I said would be true, that means their revenue and margin would be different than before, especially if their valuation model or the fact that they had high valuation because the education sector takes up most of the family spending out of the 2 million to raise one child. So that's why probably a lot of the companies cannot support their high valuation from before. Things would need to change. But with that said, even though the regulation might be very tough, I still don't think companies like TAL and EDU would go off business. If the government need to integrate the school with tutoring program, then I think most likely TAL would be the institution to cooperate with the daytime school, if not the only one. And for EDU, they're not just K-12 business. Big part of their business is from teaching English and helping kids to study abroad in other countries. So luckily, they are not facing vital problems here because they still have other business supporting it. Maybe that's why the share price moving had been going better, even though it's also destroyed altogether. But at least the selling volume, it's not as big as TAL because this is increasing selling volume over the time more and more. YQ relies heavily on the K-12 as well, but the thing is, their valuation has gotten into very cheap, only 700 million. So if anything, I think the institutions that were early investors for YQ, because its recent IPO, lockup periods barely expired yet, and the share price dropped like this, how do you expect the institutions to profit from this investment at all, right? They didn't even have time to sell out any shares and the disaster happened already. So if anything, I think if they know insiders and they think the company can survive, chances are they might think the company is too cheap right now and they have no problem owning more shares, given the fact that they are confident they can overcome this. There's a good chance that even the owner or related investors or related institutions might buy more shares back. And because it's a small cap, so with less capital can pull up the share price more. So that's why you see some big buying volume a few days ago, and so far has not completely broken out the support yet. It was 3.97 and today it closed at 3.96. Not the best, but still has a little hope, okay? Tomorrow or the following days would be very important. For TAL, I think if you want to give it a try because you believe the industry would survive in the end after all the storm, you can try to add in slowly or set up stop loss. So in case days like these weeks would save your life, dodge a bullet. I thought 21 is a good support, but seems like today it was moving around 21 for a long time and still broke it in the end. If it cannot get back up within a short time, then it might reach lower support, 19.2, 18.6. Maybe try out 18.6. Now let's go over with our stocks. NEO had a very good run today, increasing 5.2%. Very good movement so far from the bottom. Have been growing very strong, resting a little bit, continue growing. Resistance at 47, but today it has successfully filled the gap already, looking like it wants to break the resistance. If it breaks 47, next resistance is 49. So 4% from here, another resistance at 49. So a lot of people ask me whether it's okay to buy in NEO, and I have been saying this the whole time. If for long-term investor, you can buy in as long as you can be prepared that it might get rejected at resistance and backtest. And if you believe in the long-term future of the company, anytime you buy in, it's right. But for short-term, I wouldn't buy in at the resistance level unless it had broken out, backtest, confirm the support can hold. Then when it's backtesting, it might be the time for a short-term position. But from the chart wise, it's looking very strong momentum, very good run up, lots of support below. NEO should have a lot of things planning, so a lot of good news that we can look forward to. But at the same time, there should be also a lot of uncertainties as well. So right now, what's critical, it's really about the leader's vision and how he would execute through and the team's ability. For example, they want to do sub-brand to expand their product line to the lower range or mid-end for more target customers. And that would mean they would be facing a lot more competition than what they were doing before. Mid-range model would allow them to access to much more demographic, much higher delivery and revenue numbers. At the same time, they are entering into bigger competition with the other brands like Tesla, Xiaopeng, BYD, Geely, and even Xiaomi that's coming up. And right now for the high-end range, they are still quite comfortable as they are still the only high-end Chinese EV brand in China right now. But this will change as well. We need to know that Huawei had launched their EV2 and we can assume more and more will come. But it's a big market and rising industry, so competition is not the worry for this stage. And right now it's really a fight to see which management team has higher execution level to achieve what they promise. For now, NEO is still sitting in a comfortable position. EH is consolidating on the side. Best case scenario would be for it to move a little on the side, making small movement like today to digest the selling pressure, the bull trap on that day. Best case scenario. LKCO had been falling for 3 days. The gap was filled and still supported by the 500 MA, which was at 1.93 and today the lowest was 1.93. Since the gap is filled, so it's not looking as strong as before, but still has the support here. But if it's broken, it would reach lower support and it would somehow break a little the chart and might take longer to digest the bull trap up there if this support is broken. So it's important for it to stay above or at least touch the 10 MA within the next 1 or 2 days so it can continue the uptrend. Best case scenario. Since when I'm talking and the Chinese market is open, let's see today, wow, open and quick diving, lots of selling pressure, V-shape recover, dive again, big dip, and then recover again and now a dip again. Looking dramatic today. I think it's fighting to see if it can get back to the purple line of support. Important day of closing today. But on the other hand, it does seem like the Hang Seng Index is looking better. Because I said I think Hang Seng Index is near the end of the pullback and should rebound from here. And right now it's up 0.5%. Let's see the closing. But the Hang Seng Tech Index is growing 1.7%. That is quite strong. At most it was 2.3%. So that is good for the Chinese techs. If this pullback is over, it would mean we just had the best time to buy in a lot of the Chinese techs like Baba, Baidu, IQ, those internet commerce related stocks, JD included. See, today a lot of the big Chinese techs were up already, like JD up almost 3%. Baba up 1%, quite good for Baba already. Last week I said now that Luckin Coffee had broken out, I think the next one that breaks out might be Viomi, ticker symbol VIOT. Last week it was on this day, around 7.9, and it had been growing secretly for 23% in these few days, breaking out, looking quite strong. Even KR has a good move, might be a good start. I'm happy I bought the dip a few days ago. VNET looking good. Strong and healthy run. Might be just the beginning. Even HOL, I think it's about time to... Even HOL, looking interesting. Had been sleeping for over a week. See, BLDE had run off already. Every day had been growing. Maybe next is HOL. QS, I'm still holding. Still have good hope for it. Shaking. Douyu, still looking good. No problem. Same thing with Huya. Douyu, ticker symbol DOYU. Huya, ticker symbol TUYA. For myself, I am quite getting heavier in the crypto. I told you, the blockchain sector. Ticker symbol CAN. I added more today, but decided to trim that part again because I need to keep a little bit cash on the side. Also, I'm quite heavy on CAN already. 4,000 plus shares already. It's not little. Also SOS. Now, what do I keep cash for? There are a few targets I want to aim to buy the dip if the opportunity shows. So what is my remaining cash for? I can tell you. For the 9, ticker symbol NCTY, I want to buy the dip at the 16 to 17 range if it gives me the opportunity. Because stop loss is around 16, so the closer to stop loss, the better. The other one is Luckin Coffee. If it dips to 7.8 to 8.2, this is when I can buy the dip. I have very heavy position already. Next is Mesa. I told you if it dips to 8.1 around that price, I can consider buying the dip, buy back the shares I trimmed. And last, TAL, if it dips to 18.6, I might catch the falling knife again. For now, I still have the call options. Okay, now if you have enjoyed this video, please give me a big like and write me a great comment, and I'll see you in my next video. That's it, guys. Hope you can find my videos helpful. Make sure you subscribe to my channel and give me a big like. Thank you.